Alright, so let's begin the show and let's talk about your portfolio queries, because if at all you have a financial portfolio that you have lined up with a financial goal, you definitely need to check upon on your strategies if you are on track or not. So to figure out all of that today with you, I have Hemant, Rustagi, CEO of Wiseinvest. Hemant, good evening and welcome to the show. And for all the viewers who are waiting for our WhatsApp number or email ID, just in case you want to send across any of your queries, you can do that. It's 865-797-4571. We'll flash the number once again so that in case you've missed it, you can note it down. And the email ID is themoneyshow@etnow.tv. So these two places where you can send across your questions and we will do your life financial planning. But then let's move on. Hemant, good evening and welcome to the show. And let's speak to Dr. Ashish. He's on the phone line also with us. Ashish, hi, good evening. How are you doing, sir, today?
Hi, I'm doing great. Thank you for having me on the show.
Thank you so much for sending us your question. You're calling from?
I'm calling from Bangalore.
From Bangalore, okay. All right, and you are a doctor. What do you specialize in, sir?
I'm a periodontist.
All right, and you've been investing in HDFC Defence Fund, or you want to invest?
Actually, that's a recent fund of mine in which I started investing.
Okay.
But considering that they stopped long term some time back and they stopped SIP investment this year,
Right.
I just wanted to know, are they planning to refocus, rebrand, or diversify? And what's the outlook for that fund?
All right. So I believe that you're looking at a diversification towards this particular sector, but apart from that, you have your core portfolio already made. Is that right?
Yeah, so I am very well invested in equities that I have term insurance, medical insurance, I have a pension plan in place. So this depends on the focus strategy. So that's the reason a particular query for this fund.
Sure. All right, so let's focus on this fund, and before that, actually, let's focus on this particular sector, through which you'll also get your answer. Hemant, definitely we've seen a great run-up of as far as this sector is concerned, and this theme has really played out very well in recent times now. But then, having said that, any particular concern over valuations, or any further room for the valuations to go up if we talk about defense sector stocks specifically, Hemant?
Yes, Kavita. I think as far as the sector is concerned, the sector has been doing very well. And as we know that the Indian government has been focusing a lot on the defense sector and not only trying to make India self-reliant as far as the defense is concerned, but also I think they have quite ambitious export targets for the next couple of years. So clearly, I think the sector will continue to get the focus from the government as it deserves. But as an investor, you need to look at beyond this. While it gives you the assurance that the government will continue to kind of keep focusing on this particular sector, but when you're investing in the stock market, the kind of run-up we have seen in the defense stock, definitely valuation is a concern right now, especially for some of the stocks. I think the kind of run-up we've seen, because what happens is, even though the sector has the potential, it's very crucial as to what level of valuation you enter for you to really make money. So many times it happens that we feel that we took the right decision, we kind of invested in the right sector, but why are we not making money? Is because again depends on timing, and as we always say, when you're investing in a sector or a thematic segment, what is important is the timing for both entry as well as exit. Now, having said that, I'm not saying that this sector does not have potential for growth going forward. The crucial thing is how much exposure you have, what kind of exposure you have in this, and what kind of risk profile you have. So if as an investor you are very clear that you understand the attendant risk of being in a sector fund where the valuations are so high, and you are committed to invest through SIP, then maybe there is a scope for you to kind of have some exposure in that. But again, you will see a periods of what we are seeing, even for example now, you will see periods where the performance is not good, maybe the fund does not perform well, or maybe you see a fall which is steeper than the rest of the market. So as long as we are ready for that, that is fine. But my belief is that if you're going to invest a small sum in a sector, even if the sector does well, you actually don't get the benefit of it. So I think look at these factors before you kind of decide whether to go ahead with exposure in defense sector or not.
All right, which is why there has been a restriction as far as investment is concerned, Hemant, in this particular fund also. So the question and concern for Ashish is that he should hold on to it or wait for the investments to begin, or he should just diversify. If at all he needs a defense exposure, he can look at other investment options also.
No, I mean, if he's already invested in that, so maybe he can hold on. Depends on how much exposure he has in that sector. Look, for the sector and thematic, the issues, there always be opportunity. For example, if you look at other sectors today, manufacturing is another sector, which is doing well and which could do well. Infrastructure is another sector. So, one way to kind of reduce the risk, even in your exposure to the sector and thematic fund, is maybe have a few sector or thematic funds where you need to be mindful of the fact that your exposure overall should not be very high, but within that you can kind of diversify. So if the exposure to defense sector in the existing portfolio is not really very high, and I'm sure then in that case obviously the returns are very good. So even if there is a period when the fund is not doing so well, he can still wait out for that period. So I think that, like I said, these are the couple of factors that he needs to keep in mind.
Ashish, are you there on the line with me? Is there anything else you want to ask Hemant? Are you clear on your query?
If there is a final question I can ask,
sure.
Expand on the question.
Yeah.
Since it was mentioned that defense should not be the sole focus, I have also realized that public sector units in general are the trust that the government would be in them in the coming years and increase. So what about investing in something like a CPSE index fund, which deals only with PSU?
Sure. Hemant?
I couldn't hear the question. You need to just help me with that.
Even I had difficulty in hearing his question actually. I assume that you were able to. Dr. Ashish, could you please be slightly louder?
Hello, so am I audible now?
Yeah.
So my query was that keeping in mind that defense is a high risk sector, how about investing in public sector units or something like a CPSE index fund which would diversify the both?
But you already have a core portfolio made and other large caps might already have that kind of an exposure. You really want to separate...
Vis-a-vis the HDFC defense fund, something like a CPSE index fund also which has given great returns in the past.
Okay. Hemant, do you think you should be diversifying that way?
So it's again the same issue. I think if you look at the PSU fund, the PSU index fund, the CPSE that he's mentioning, they've had a great run-up. Exactly like what has happened in defense. The issue is again the valuations. Even there the valuations are looking stretched, but I think what is important to understand here is that, for example, if you're looking at a PSU fund per se, PSU equity fund, that portfolio will be more diversified than looking at a pure defense fund. That's for sure. Because there can be PSU units, there will be banks. So I think that is going to be more diversified than that. So like I said again, it depends on the level of exposure that you have from the defense fund. If you want to pair that exposure and maybe want to include something, PSU can be looked at, but again, be prepared to face those periods where maybe from now on sometime you will see subdued return and maybe not the kind of return that the fund has given in the past. But if you're investing systematically, I think you can carry it. Definitely, it's a good theme, good sector to invest in if you're looking at diversifying.
All right, that's the answer for you, Dr. Ashish. All the best. Let's move on. Let's take Dharanesh's question. He's on the phone line waiting for us. Dharanesh, hi, good evening. Thank you so much for sending us your question.
Hey, yeah. Hello, how are you doing?
Hi. Yeah, all good. Thank you so much for asking. You're calling from Bangalore. What do you do?
So I'm just an analyst from one of the MNCs, Big Four MNCs. So I already have quite a portfolio set up in terms of the mutual fund, and I've been investing in wide. But my international exposure is only limited to the S&P 500 of Motilal Oswal Fund in the US equity. I just wanted to know if there is any other, as capable as S&P 500 or, Nifty 500. Is there any other capable index that is available on the Indian market mutual fund that tracks any other index funds other than US equity? So there is something I just wanted to know and take an exposure on that.
All right, very interesting question. In fact, diversifying in international markets is crucial, but then maybe a stage 2 for your portfolio, and I think you're already ready for it. So, Hemant, let's talk about diversification beyond what he already has. He has Motilal Oswal S&P 500, but then what about diversifying into US tech theme? Considering the kind of movement we've been seeing in almost 1.5 months, we've seen these funds giving super spectacular returns, but the valuation concern, however, has come up over there also in that particular segment. But the kind of downtrend we are looking at, if we consider this as the right time to invest or the valuations getting attractive, is there a scenario to invest in US market and specifically in tech stocks if one wants to really diversify their portfolio in that direction? Hemant?
Yes, Kavita, I think it's a very important question and very important aspect for every investor to kind of have clarity on. Look, global diversification I think is a key factor. When you're talking about diversification, the advantage is that when you're going for international funds, you get diversification in the geographical manner, and I think that goes a long way in actually diversifying the portfolio in the true sense. So I think he's taken the first step right. I think he already has S&P 500 Motilal Oswal index fund there. Yes, definitely there is a case to either look at Nasdaq 100, or if he's looking at markets beyond US, then of course there are a couple of other options. One of the options that I can kind of suggest is PGIM Global Equity Opportunity Fund. Let me just talk about Nasdaq first. Yes, clearly, I mean, we've seen some kind of run-up already in the Nasdaq's index, but I think given the fact that we are going to see a rate cut maybe as early as September, and that is what I think the markets have been waiting for, even though in anticipation we've already seen that some kind of run-up already there. But I think once that happens, we get more clarity on what kind of rate cuts, how many rate cuts will happen over the next 1 year or so. I think there'll be lot more clarity. We can expect Nasdaq to continue to do well. So I think that can be one good addition to the portfolio for sure. PGIM fund that I mentioned again gives him an opportunity to, it's again fund of fund, to invest beyond the US market. Of course, there is exposure even in the US market there. So this is a fund of fund which invests in a fund which has exposure to US and Europe, and also apart from that South Korea, Japan. So I think it's a fund which kind of takes him beyond US market. That's another fund that can be looked at. So again, it depends on how much exposure he has. Again, there is a thumb rule which says that maybe exposure to international funds should be maybe around 10% or thereabout. But again, it's a thumb rule. It does not apply to everyone. It depends on the kind of portfolio you want to have and how much clarity you have in terms of the attendant risk or pros and cons of investing in international funds. So as long as you're clear on that, I think these are a couple of fund categories that one can look at.
Anything else you want to ask? Dharanesh, are you there on the phone line? All right, I don't think he's on the phone line, but then PGIM India Global Equity Opportunities, and you can also look at your exposure in Nasdaq. Let's move on and let's take Mr. Ashish's question. I think he's calling from Gujarat, Anand. Ashish, hi, good evening. How are you doing today?
I'm fine, madam. How are you doing?
I'm doing good. Thank you so much for sending us your question. And Ashish, as per your question, I can see that you're investing in HDFC Mid-Cap Opportunities, Kotak Multi-Cap, HDFC Flexi-Cap, Nippon Small-Cap, ICICI Pru Large and Mid-Cap, Quant Value, ICICI Nasdaq 100. And so your portfolio is so far 25 lakh, and portfolio horizon that you've set for yourself is 10 years. And the target is 3 crores, is that right?
Yeah. And I have two questions, madam.
Sure.
Before 2 months, I had called you, and one of your guests told me to exit from some funds, because at that time I have 12 to 13 funds. Now I have exited from some funds, and this is my running fund.
Okay.
So
all right.
allocation wise, like 50, 30, 20, it is okay or not? And second question is, I want to exit from also Quant Value Fund. Then instead of
Okay.
quant value fund, I want to pick one flexi cap, more flexi cap, like quant flexi
Okay.
cap. So should I go for that
Okay.
or not?
All right, so let's get all of your questions answered. So Hemant, let's take it one by one. First, the exposure in terms of market caps in his portfolio. How do you look at it?
Well, Kavita, if I analyze this portfolio, according to me, I think looking at how much money is investing right now, because that's really important. And if I look at his time horizon, I think the combination is just perfect. Whether we look at it in terms of categories, I think there are all the important categories which should be there in the portfolio of anyone who's looking at building a diversified portfolio over the longer period. So there is a multi-cap, there is a mid-cap. There are different categories of fund. There's flexi cap, small cap. There is large and mid cap. There is a value fund. So I think in terms of categories and also the fund that he has selected or chosen within that category, I think it's just perfect. So according to me, there is no need to change in the portfolio. It's always good to have a value fund, especially when investing for a long term, because you don't want all the funds in the portfolio to behave exactly in the similar manner in different market conditions. So I think there's always a case to have a value fund, and the quant value fund is good. So he can, according to me, continue, but if he's looking at a flexi cap fund, maybe like he mentioned, quant flexi cap, or some of the flexi cap funds that I can recommend is HSBC flexi cap can be looked at, or even Motilal Oswal flexi cap. So if at all he's looking at adding one more flexi cap there. As far as his target is concerned, he has a time horizon of 10 years. His investment is around 34,500. If he continues this process, he can expect to build a corpus of around 1.6 crore as against a target of I think 3 crore. So clearly he needs to increase his SIP, which has to actually be increased to 85,000. The total SIP has to be 85,000 to achieve the target of 3 crore for the next 10 years. So clearly there is a gap in the amount that he is investing now and the amount that he needs to invest. Since even though he has 10-year time horizon, considering the fact that you're investing through SIP, he needs to kind of increase the amount as early as possible.
All right. Your suggestion on replacing the quant value with the flexi cap, is that needed? Because he already has a HDFC flexi cap.
Yeah. So no, just now market is in very high. No,
Exactly.
So that's
Yeah.
why
So I
I'm
was just
thinking
asking Hemant.
that
Yeah. Sure.
instead of value fund,
Sure.
should I go for quant flexi cap? So same.
Yeah. I got your question. I got your
quant.
question. Let's just look at the answer. Hemant, what do you suggest?
Well, like I said, in my view, I think he can continue with the value fund because, like I said, you don't want all the funds to behave exactly the same way in different market conditions. So there's always opportunity for a value fund to kind of pick stocks which can give you a healthy return over the longer period.
All right, Ashish, that's the solution for you. That's the answer for your portfolio. Is there anything else you want to ask Hemant?
And just now my portfolio value is like 25 to 28 lakh. So
Okay.
does the gate counted that?
I think that's
my fund value
factored.
is
Sure. Sure. Hemant?
No, sorry, I couldn't hear Kavita.
So the portfolio value is 25 lakhs already. So he wants to understand if that's been factored in your calculation of him achieving 1.6.
Yes, that has been factored. Yes,
Okay.
that has been factored.
All right, Ashish, all the best with all the changes recommended to you in your portfolio. Let's take Bharat Bhushan's question, and this is a question via email. He is investing in HDFC mid-cap, and he has a lump sum actually in HDFC mid-cap, Nippon India small cap, quant PSU, and he also wants to do a lump sum investment of 1 lakh for 5 to 8 years. So we don't have him on the phone line, but that's the kind of details we have. I think the SIP is in Nippon India small cap and quant PSU, and otherwise HDFC mid cap could be a lump sum investment. Hemant.
Kavita, if you look at the portfolio, there is a mid-cap fund, there is a small-cap fund, there is a PSU equity fund. For a portfolio of this size, I think it's very, very aggressive portfolio. Look, let's not forget that equity by itself is an aggressive asset class. You can always make your portfolio aggressive over a period of time. Once you have the wherewithal to understand the pros and cons of investing in equity, the nuances of investing in equity. But to make your portfolio overly aggressive right at the start, I don't think it's a great idea. Well, I mean, since you're looking at investing in lump sum money, I think there is a scope for him to include a flexi cap fund in the portfolio. Even though this investment amount is small and maybe adding one more fund is not a great idea, but definitely what can be done is the SIP and PSU can be stopped, and you can look at one flexi cap fund. I did mention about a couple of flexi cap funds, HSBC and Motilal also flexi cap. One of those funds can be looked at to include in the portfolio and reduce the kind of aggression in the portfolio a bit.
Right. So the lump sum investment is for 5 to 8 years, and the rest of the investment we're actually not aware of the time frame. But then, considering the 5 to 8 years time frame, is there more risk that you are assessing in his current portfolio in the current fund choice?
No, I think once you get into a flexi cap fund, the issue can be if the question is whether you should go in for as a lump sum or maybe in a staggered manner. Maybe it will be a good idea because it's a large sum compared to his portfolio, to do a mix of maybe a lump sum and STP. That can be done, but I think once he includes flexi cap in the portfolio to the extent of 1 lakh plus the SIP of PSU going into this, I think the portfolio will be much more balanced.
All right, we do have more questions on the show, but then it's time up in today's session. Hemant, thank you so much for being on the show and helping our viewers with all their portfolio queries. And for all the viewers who are when you send across your portfolio queries, do send us across on our WhatsApp number and email ID. Thank you so much for watching. Goodbye.